Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, April 25th, 2017, and this is the Daily Report for Gold and Silver, a continuation of the massive downside pressure we have seen since the market really hit 1,300 and has been moving lower. Today we see gold trading off almost $13, net change down $12.60, putting it at $12.6490. That, of course, is most active futures contract. When we look at spot gold, that also traded lower, $12.6340, net change about the same, off about $12 on the day. Net loss about a full percentage point. That was dwarfed, though, when we look at silver. Silver is trading off by well over 1.5%, currently trading at $17.56. It's traded to a low of 52 and a high of 17.97. So we can see that silver is certainly under dramatic pressure today. Spot price is representing about the same, trading roughly at $12.58. Noteworthy is the fact that the dollar continues to fall, being supportive of the precious metals, but certainly not enough to alleviate the downside slippage that we have seen. A dollar index down off about 1/3% at 98.67. So absolutely no doubt we have seen some major downside pressure in gold as well as silver. We're looking at a daily gold chart, this most active futures contract, and we are plotting a couple of different fib retracements so that we can plot where we believe a logical point of support might be found on a technical basis. And to that end, we have one fib retracement which basically goes from this top right here, which occurs at roughly 1260, and then comes down to these lows that are here just below 1200. I think I have it marked at 1195. I have another fib retracement which starts at this 1195, of course, and then moves up to these tops here at just shy of 1300, 1297, 1296. And of course, we always look for harmonics in the market as places that we can identify as having strong potential for support or resistance, depending on where we're looking at in the market. Now, given those parameters, here's what I'm looking at. The first real area that we need to look at is going to simply be based on this particular top. This is going to be, of course, the start of one of our fib retracements, but it also aligns with this particular top that came in March and sits at around a 1264.20. When we draw a line across it, we can see that that is precisely the low that we hit today. It did close just off of that at 1265.50. And so this is a potential area for support in the market. Just below that, and we need to then go into this longer fib retracement, is a 38% retracement, and that comes in at around 1257. One area that is extremely noteworthy, because we do have a fib harmonic, is this particular area between 1248 and 1245.90, so 1246, and it is a 50% retracement of this longer move and a 23% retracement of the shorter move in terms of the fib retracements that we're looking at. So based upon that, we want to see, A, will the market find some potential support in this area? Because this does match up with this top right here. And if that's the case, it would be an interesting area to look at in terms of repositioning ourselves in the market. Realize we have a budget meeting and the government will run out of money. I have no doubt that in an 11th hour stand, they'll fund it somehow. But I don't believe that the crisis in North Korea is over. In fact, I believe personally that it is still ratcheting up. And the outcome of that, to me, is extremely scary. But we know that that kind of geopolitical uncertainty will certainly be supportive of gold prices and to some degree silver. My recommendation right now is to maintain being flat in the market and await our next signal that, of course, will be sent out by email and text message. And then traders, lastly, I've converted our daily chart into a weekly chart. And we talked about this a little bit with silver's pattern. I believe that was an engulfing bearish. And the star formation we talked about on Friday also. If you look at this weekly chart now, based upon the fact that a couple of days have gone by this week, and although it is only Tuesday, we are still showing a pretty solid down week. If the market finishes here or lower, we would be able to identify a basic pattern, and this pattern, of course, would be a three-river evening star. We have the definition of after a defined downtrend in the market. We can certainly say that that criteria has been met. We have a star that is gapped above that green candle, the long green candle, and that, of course, is followed by a red candle, meaning a week in which it opens and then closes lower. The larger these candles, the stronger the signal. But we have seen this pattern before, whether it's a three-river morning or three-river evening, and I draw your attention to the occurrence of what we saw back in December when the market bottomed at 1120. Here we've got a very, very strong three-river morning star. And traders, as far as silver goes, we talked about the fact that on Friday we had identified a simple two candlestick pattern, in this case a 2-week pattern called an engulfing bearish. We also talked about the fact that you wouldn't actually take a call like this without getting a confirming candle, and we are certainly developing the confirming candle as I spoke about on Friday. We have a red candle with a lower low, red candle with a lower high, and that is a ominous signal in terms of some downside potential. But at the same time, there is a caveat to that, especially on a weekly chart, and that is here's an engulfing bearish right here. It did confirm with this extended long downside candle. However, that was really the end of the sell-off because the market began to climb from there. So just because we're getting this on the weekly, we need more information to determine if it's an expanded trend or if it's going to be a very, very short move in the market. In other markets that we look at, in a historical day in U.S. equities as they continue to surge to the upside, a triple-digit gain in the Dow Jones Industrial Average, climbing above 20,000. I believe for the first time since March of this year, when we saw the market really climb above 21,000. We're not at a record high in the Dow Jones Industrial Average. However, it is extremely impressive, gaining well over a full percent today, gaining 232 points, closing at 20,996. Truly a historical move. S&P also gaining tremendous value, about 0.6% at 2388. However, the star today in U.S. equities was the NASDAQ Composite. That breached 6,000 for the first time in history since the creation of the NASDAQ, which occurred back in 1971. High on the day was 6,036. And the low was 6,004. Market closed up about 0.7% at 6,025. As far as U.S. equities go, this was truly a historic day because for the first time in the history of the NASDAQ, which was founded back in 71, so we're talking about a 46-year move to this point, the NASDAQ has for the first time hit that milestone, trading and closing above 6,000 on the composite index. We're looking at a very, very long-term chart in the NASDAQ, each candle representing a week, and we can see that the market has had a series of dynamic rallies followed by subtle corrections. We have had rallies that were followed by pretty dynamic corrections here as well as here. But of recent, and when we consider what's happened really throughout the beginning of this year, this is 2017 right in here, we had a historical climb that took us to a point in which we found true resistance in the market, and that came in at around 5,900. You can see all of these tops providing headwinds for the index itself, but we had a clear and decisive breakout above that particular price point, and that to me is truly impressive. I expect the NASDAQ to continue to outperform the S&P and the Dow because of the fact that it is a tech heavy index, and it is the tech stocks that seem to be rallying to an extreme extent. Interesting action when we look at crude oil. Crude oil closed up slightly higher, only 13 points higher, about a 0.25% gain, nothing in crude oil. Still below 50 at 49.36. But what I think is most noteworthy when we look at this market is the fact this is our 200-day moving average right in here, this dashed line. And when we look at this average, we talked about the fact that this market traded to this particular price point. This is a daily chart, but take a look at how it kind of landed right off of the lows in the market and closed higher on the day. That's why it's a green candle, although it's only slightly higher. That could easily be due to simply short covering. So I want to see if we get a clear break below that, or if this particular price point, meaning roughly $49, is going to be a technically supportive area for crude oil. And traders, lastly, do want to take a look at the dollar. We spoke about the move yesterday as it broke below this 200-day moving average. You can see that is this dashed red line. We know that on a technical basis that has provided support if we look at it historically. We also know that we had a gap as this market broke hard below that yesterday. And unlike previous occasions where it found support here, by breaking through that and getting this follow through today, it tells me that at least on a technical basis, this market absolutely has lower to go. I would look for more downside pressure in the dollar index. My current level that I am looking at as a very strong potential for the dollar index is 97.50. So traders, if you recall from Friday's show, we talked about the fact that we did get stopped out a vast percentage of our subscribers, as I did make a recommendation on Wednesday of last week to move our stops up. I spoke about trying to buy the dip on Friday and looking for the market to track a little bit lower. That is exactly what we saw yesterday as well as today. Yesterday we saw the market really trade lower, but trim much of its losses as we went into the close. And if you recall from yesterday's show, even with the lower pricing, we hit an intraday low, I think, of 66 yesterday. My sense was I wanted to see where the dust settled before we initiate another long position. I talked about various levels in the first part of our report today, and that key level we want to watch right now sits at around 1262. We want to see if it's going to hold there. If it does, we know that we have a good entry point. If not, we have plotted through Fibonacci retracement the next levels that we'll look at below that. For right now, my recommendation is to stay flat with no active trades and await our next trade signal, which of course will go out by special email as well as SMS text message to your phone. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.